considerable. The broader markets are doing better than the benchmark at this juncture, and you have the mid-cap index that's up about 0.9%, and you have the small-cap index that's up about 1% or thereabouts, 1.1%. Among the key sectors to watch today, most of them are in the green, and you have metal, which is gaining a little ground after the kind of losses that it's seen in the recent past. It's up about 1%. That pack. Oil and gas is up about 0.8%, as well as PSU banking pack is up about 0.8% or thereabouts. We're focusing in on a particular stock that is losing ground though, and that is Metro Brands on the back of its earnings. It was down about 4% earlier in the day, and it is a little bit of a weak day of trade for this counter. Let's talk about the earnings though, Smriti. Right. What stood out to you?
Good morning, Alex. We saw revenue going up, but clearly operational profit went down, margins contracted, net profit also went down. So even though they did well on the revenue front, it rose about 6%. But after that, maybe the expenses went up, and because of that, there was the operational profitability went down about 3% to 199 crore, margin at 31%. Versus 34%, and net profit down about 12.5%. So that's where we stand. And they also made a strategic partnership a couple of months ago with Foot Locker. However, that will come into play and contribute to the top line later, but not this quarter results. But there is a decent outlook that brokerages have come out with. And on that note, I will go to Sneha on this. Good morning, Sneha and Vaishali. Metro Brands. Sneha, fundamentally, what kind of trajectory do you see for the longer term for this one?
Okay. Very good morning. So from longer term perspective, we believe that the company is likely to do well. It was expected that the numbers would be a little weak given the the weak spending. So over the last few quarters, spending has been a little weak, and it is expected to probably continue over next 1 to 2 quarters. But then when we talk about the long-term trajectory, definitely the company is expected to do well. Because it has been showing industry-leading growth, which has largely been supported by very steady footprint expansion. So that should continue for the company. Though we might see some sort of moderation in the same-store sales growth over the in the near term, we believe that we can expect a secular 20% kind of growth over next 5 years, and this should be largely driven by the by strong execution. Very good store economics that we have seen in the past, and a huge runway of footprint addition. And moreover, it generates very strong operating cash flow, which should actually support its store addition drive and the new brand additions. Moreover, the recent acquisition that the company has made, that is a Fila and Foot Locker, so that would further accelerate the growth for the company, and this is not currently captured in the valuations. So we believe there's a large scope of value addition that can come from these two brands, and it has a huge potential to add to its overall earnings over the next few years.
Understood. All right, it's time then to start with the viewer questions, and there are quite a few that are already flowing in. Once more, if you've got a question, you can send it to us on the WhatsApp number. Just make sure you tell us what your name is and ideally where you're also tuning in from. We've got the first question coming in from Subhas, and he's asking, I think it's an interesting question. For the next 10 years, prospects in spaces like artificial intelligence as well as electric vehicles. Generative AI is a theme that is playing out in other markets, but there are companies here in India that are engaged in facilitating the growth of that business in other geographies. And I would think there are quite a few IT companies here as well that are engaged in that activity. The question is, which one should you focus in on? And I will come to you, therefore, Sneha, to tell us which stocks you like in this space.
Okay. So for artificial intelligence, I believe almost many IT companies are making a steady investment towards to make a progress towards the artificial intelligence. And I would say we can look at Scient because the company has been continuously investing to to enhance its overall offering. And recently, it has made various strategic restructuring efforts. So the company has a well-balanced portfolio, and with the improving the bouquet of portfolio that the company has an offering, so it would be a good bet to look at from the IT space. Now, if we talk about the EV space, then Tata Motors is one name which I can really bet on. Because Tata Motors has been it has been the front leader in terms of the new launches in the EV category, and now with all the other segments also doing well for Tata Motors, be it JLR, be it the domestic or the CV part. So all the verticals are doing really well for Tata Motors. There's a huge scope for the stock to move another next leg of a rally, which can be seen in Tata Motors.
Right. Next up, we're talking about global spirits. Now, we have a question from Kirti from Hyderabad, and they say they have already bought in the share at 942 level, so slightly elevated there. Vaishali, the time horizon here is 6 months. What would you suggest doing? Holding on to it or get out of the stock at this juncture?
So I would say actually Global Spirit, well, the stock right from 1300, 1400 levels has come down to so low of around 825. So I would say, well, 780 would act as a support because it has only been consolidating. So I don't think it should be in a hurry to be selling off the stock. Wait for a bounce back to come in, because I think if the bounce back sets in, I think this stock is ready for a target of 935, 950. At these levels, one can have a relook as to how it's progressing. But for now, at least 950 should be the target that one should look for.
All right. So that's a view on global spirits. I'm not sure, Sneha, if you're going to have a view on this. I'm going to try anyway. Karthik from Visakhapatnam is asking about a counter called DigiDrive Distributors, and I've just done a cursory search of this. It is essentially the demerged entity from Saregama, and this is something that took place, I think, sometime last year. It is the e-commerce spin-off of Saregama. Even if you don't have specific coverage, the question essentially is that we've got the viewer, Karthik, who has a few shares, and it's hitting lower circuit consistently. What should they do? Should they try and exit as and when the opportunity presents itself?
Okay, we really don't have any view on it, but I mean, if we talk about this, this is a very evolving kind of space where a lot of risk is still there. There's not much clarity as to how it would really take. So, from a retail perspective, I would for retail investors, it's really better to stay away from such counters and let the business take at least it should come to a steady stage wherein the retail investor should actually really step in. So, from the current perspective, I would actually suggest him to exit.
Okay, Vaishali, any help here or advice that you can give for a stock that is consistently hitting circuits on the lower side?
So I would say actually, both in sync, Saregama and this particular stock, they have been a disappointment. Because Saregama also, you're seeing that its stock has not really participated at all. We were hopeful that this will get into a momentum, and we were seeing some signs of positive move, but I think it's been a laggard, and I think stocks to be avoided for now.
All right. Next up, we're talking about Gujarat Gas. Now, Hetav has bought these shares 20 years ago, and they're still invested in those shares. So what would be your advice, Sneha? What should they do, Gujarat Gas? They've been holding these shares for the last 20 years.
Okay. So Gujarat Gas can be really held on because if you see, the propane prices have actually risen a little in Middle East. And this should be positive for the for Gujarat Gas, because obviously that would lead to shift in the so that would lead to shift towards the natural gas and from the industrial side. So the industrial demand would pick up. So that should be positive. And moreover, the valuations are really attractive at this point in time. So Gujarat Gas can definitely be held on from the next at least 1 to 2 years perspective.
Okay. We've got Devang from Ahmedabad that's tuning in and asking about a couple of counters. he's got Jupiter Wagon, which he's seeking a long-term as well as short-term view on. He's got 250 shares, which he's bought at levels of 267. So he's making an upside. So first, Vaishali, let me come across to you on the charts and ask you what's your view on this particular counter. Would you hold for the long term?
I definitely, as a matter of coincidence, I have just recommended once again as a momentum trade to my clients right now. So while I'm talking to you, the stock has got decent volume, and I think like all rail stocks doing well, this is one of the counters which is ready for a breakout. So above 405, even for a short-term perspective, I would look for a target of around 420. So if he has bought this stock, well, continue holding with a trailing stop loss, because above 405 is going to gather more strength for higher targets. So, well, that would be my view for a short-term perspective. Let's see how it goes, because overall I'm seeing a good uptrend continuing even on the longer-term chart period. So I think 420, 450 would be the next triggers that one should look for.
Okay, so that's the view on the technicals. There is still potential upside, and indeed the stock is up as much as 4% today. But let's also get a fundamental view. Sneha, the entire wagons pack, the railway pack has been, it's not a new focus, right? It's been gaining ground for quite a while. Fundamentally, is it still a strong hold and a buy even at these levels?
Yes, definitely, because there's a lot of steam left. I mean, like, even post the sharp run-up that we have seen in the rail stocks, some of
I think we might just be having a little bit of an issue with Vaishali's line. Vaishali, if you're back, I will try again. Vaishali, you were talking about Jupiter Wagons. Sorry, not Vaishali.
Yeah.
Sneha, you were talking about Jupiter Wagons.
Can you hear me?
Yes, I can hear you. Please go ahead.
Yes. So as I was saying, so there's a lot of steam still left in the railway stocks, and one can still find few counters wherein the valuation comfort is there. Now, if we talk about Jupiter Wagons, so the company has been making a lot of on enhancing its capacity, and there's a lot of demand which is being thrown up on the wagon side. So with the kind of strong orders that are being rolled out by the government, be it Vande Bharat or be it Amrit train, so there's a lot of potential, and that the company is tapping through a lot of capacity addition. Even its brake business is also doing really well. So we are expected to see very higher execution on that front in FY25. So net, the potential is huge, and the company is meeting it through its substantial capacity addition. So the stock should really do well, at least for next few years.
Right. So it's a hold both on the fundamentals as well as on the technicals on Jupiter Wagons. We have to slip into a very quick break. There's more on the other side, so do stay tuned.
Welcome back. You're watching Ask Profit. Before wasting any time, we'll quickly jump into the questions. This one's from Charala, and they're talking about IndusInd Bank and HDFC Bank. Now, they've been in the news, HDFC Bank, for the last couple of days, and IndusInd Bank is also falling today, on the back of earnings. But Vaishali, tell us, how does it look on the charts for HDFC, HDFC and IndusInd Bank? The time frame here for Charala is 2 months.
Well, so I'll tell you, HDFC Bank, well, it has corrected quite a bit, but I still see no signs of reversal for now. So technically, I would say that though it's getting into the oversold, the near-term support lies at 1460. And if that support also breaks, I think it can go to 1430, 1450 levels. So let's wait and watch, not in a hurry, but if he's going to accumulate, I mean, since you said short term, I would say wait till you get a reversal. So I would say wait till you see a reversal, not to get into the stock right now. But if it's for a longer term perspective, I would say start accumulating from here on. The other stock that you mentioned is
IndusInd Bank, yeah.
Yes. So IndusInd, I would say the long-term trend has been pretty strong, and after the result, the corrective move that it has shown, I would say right now it has come towards the support levels of 1560 to 1540. This is the level that one should watch and probably buy, because below 1540, this can get further weak. So I would say buy for the stop loss below 1540.
Okay. Sneha, quick view on NTPC. We're running out of time, so I'd like to take a few more questions if possible. We've got Tarun, who is looking to buy this at this current level for the next 2 years. How does it look on the fundamentals?
Okay. So NTPC, definitely one can buy at the current levels. I mean, the energy demand is really buoyant. I mean, it's at record highs, and going ahead with the accelerating capex that is expected over the next few years, the demand from the industrial side would further accelerate. So definitely, it's a very next few years would be really good for the energy companies, and moreover, the companies are making a shift towards the. They're making a higher investment towards the renewable energy, wherein the government has set big targets till FY30. So even that would fuel growth for the company. So net, one should really be invested in at least one of the power utility stocks from next few years perspective.
All right. Next up, we have a question from GC Prakash. They're talking about two railway stock, that's RVNL and IRFC. Now, they bought both the stocks at very low levels, RVNL at 27 and IRFC at 36. They have a long-term view on this, but the specific question is, when should they think of selling these two stocks? So, Sneha, what would you suggest if they want to take some money off the table?
Okay. In case of RVNL, one can still stay invested, because the valuation still looks pretty fair. So, and given the kind of order book that they have built up, so the revenue visibility is quite strong. But in case of IRFC, the valuation has become a little expensive post this sharp run up. So I would suggest booking profit at current levels and probably entering a little later when the valuations get a little comfortable.
We have another viewer who wants to know a short-term view on IRFC as well. So, Vaishali, tell us, how does IRFC look on the charts?
Well, it looks very strong, but I would say it's highly overbought. So I would say partial profit booking. I mean, I'm looking at a target of 170, but we are not so far. So keep a trailing stop loss if you want to maximize your profit, but otherwise partial profit booking should not be ruled out. Because very, very run up in all time period. It can see a dip from here on.
Let me clarify. This is Mr. Bandyopadhyay, and he's bought at levels of 98. He's got 100 shares. So when you say trailing stop losses, what can you give as levels? And I'm guessing that the view stays, because he's making a doubler right now, I think. No? Where's the price right now? It's not doubler, yeah.
Yes, so the trailing stop loss would be today's low, that is 149. And for a projected target of 170. So, yes, not looking at much of an upside from here on.
Okay, fair point. We've got Karan Talwar, who's asking about Alok Industries, and he's bought at levels of 34. Sneha, any view on this particular counter? It is up and about today. It's up as much as 3%, and it's not too far away from the buy price.
Okay, I don't cover the stock, so won't be able to share the view.
Vaishali, I'll come back to you if you can share a view on the technicals. What would you advise the viewer to do? Bought at levels of 34, 1,200 shares.
I would say hold on. Now that he's holding on, keep a stop loss of around 29, because as such the stock is pretty much intact. The trend is quite intact, and this is just a retracement for now, that I would say. So if the stock closes below 29, then I would say that yes, the strength is weakening. But till then, I would say that yes, it's ready for further up move, and it can go to 34 again and probably go to higher levels also.
All right. Next up, we're talking about Inox India that got listed a month ago, and this one's from Paramjeet. They bought the shares. Okay, yeah, this is for the longer term. We're not sure if they've bought it or not, but should they buy at current levels? And if they've bought it, should they continue holding it? Sneha, yeah, this one's for you.
Okay, so Inox India definitely, one can hold on, because the company is a leading supplier in the cryogenic equipment, and they are like one of the largest suppliers and one of the few suppliers. And this solution is basically this equipment is basically required on the clean energy space. So the clean energy is a evolving space, and a lot of investment is happening on that side. And when you're a leading supplier for such equipment, and with the market being a little concentrated market, so there's a lot of opportunity which is there. The company has got a good diversified customer base, and the balance sheet is very clean. The overall past financials has been quite steady, so one can definitely hold on from a 1 to 2 year perspective.
All right, thanks so much for that view, Sneha, and Vaishali as well. Thank you so much for joining in and for answering all the questions that you did. We're completely out of time on this particular edition of Ask Profit. From Smriti and myself, the team that put the show together, thank you so much for watching. Have a great weekend, and do stay tuned. Lots more coming up on NDTV Profit.